Palantir Technologies spent the 2025 period charging through the artificial intelligence landscape with the kind of persistence that usually belongs in mythology. The company's data analytics platforms became essential tools for governments and major corporations that needed clarity inside enormous information clusters. While Nvidia stumbled due to a strained chip supply and uncomfortable questions about its valuation, Palantir's trajectory kept accelerating, and its share price leapt by nearly 123% across the year. That kind of surge created a narrative that Palantir was not merely participating in the artificial intelligence movement, but helping define its structure. As the story shifts into the broader market context, it ranked as one of the strongest performers in the index, driven by the deep-rooted demand for reliable insights extracted from increasingly complex artificial intelligence systems. Yet, despite Palantir's dominance, three companies operating in very different industries, Western Digital, Newmont, and Warner Bros. Discovery, surpassed its performance with even steeper and more dramatic gains. The next step is determining whether these companies have enough momentum, structural strength, and market demand to keep outperforming both Palantir and the wider market as the calendar turns toward 2026. Western Digital carved out its massive 2025 rally by positioning itself at the center of artificial intelligence's relentless appetite for storage. Artificial intelligence models are hungry creatures when it comes to data, and hyperscale data centers needed oceans of storage to train, retrain, and refine massive generative architectures. Western Digital rose to the challenge with high-capacity nearline hard disk drives that became a staple inside server farms. These drives enabled storage measured in exabytes, an overwhelming quantity that powered generative artificial intelligence, machine learning pipelines, and business intelligence workloads. Early in the year, Western Digital finalized the separation of its flash storage business while retaining a significant ownership stake in the new standalone operation. This move sharpened Western Digital's strategic focus on hard disk drive engineering and simultaneously unlocked value that appealed to shareholders who had long sought clarity between the company's two diverging paths. The financial results reflected the impact of these decisions. Western Digital's revenue soared by 51% to $9.52 billion in the 2025 fiscal year. The company pivoted back into profitability, and its margins improved dramatically as free cash flow finally emerged from a negative territory. That recovery was not short-lived. When the new fiscal year began, Q1 results strengthened the momentum. Revenue rose by 27%, and profits expanded at an extraordinary pace of 367%, surpassing even the highest analyst expectations. Western Digital also pushed forward with innovations like Ultra SMR technology, which increases storage density and makes room for more data without requiring more physical space. These developments positioned Western Digital not simply as another hardware provider, but as a foundational pillar of artificial intelligence infrastructure. In several ways, the company's hardware leadership made an even louder impression on the artificial intelligence revolution than Palantir's software-centric analytics offerings. Transitioning toward the future, Western Digital's setup for 2026 appears sturdy as long as artificial intelligence capital expenditures remain strong. Analysts maintain a buy outlook, with an average price target hovering around $181. That represents roughly 10% potential upside from the current price of $163. Some projections reach as high as $250, hinting at significant optimism about hyperscalers continuing to build out artificial intelligence data centers at an aggressive pace. Government enthusiasm for artificial intelligence, coupled with enterprise investments in enormous data lakes, could create additional tailwinds. Still, the company must navigate certain risks, including possible supply chain complications or a decline in NAND pricing after the flash separation. If Western Digital manages to seize even greater market share from competitors such as Seagate Technology, especially in storage engineered specifically for artificial intelligence optimization, the savings delivered to customers could amount to billions of dollars. That level of efficiency would strengthen Western Digital's hardware lead and widen the gap between its physical infrastructure dominance and Palantir's software-driven value proposition. Shifting focus to Newmont, the company experienced an extraordinary convergence of economic forces in 2025. Gold prices blasted above $3,000 per ounce, and a surprising new driver of demand emerged from the artificial intelligence sector. As hyperscalers sprinted to build new data centers, gold proved essential for certain high-reliability components in next-generation processors and critical infrastructure inside artificial intelligence facilities. Newmont, already the world's largest producer of gold, took full advantage of the moment. Its mines delivered exceptional margins, and the company advanced several high-priority sites without delays. Production milestones were achieved ahead of schedule at Cadillac in Canada, Tanami Expansion 2 in Australia, and Ahafo North in Ghana. These milestones strengthened Newmont's portfolio and helped lift output towards 7 million ounces each year. Cost management remained crucial, and all-in sustaining costs stayed below $1,600 per ounce. With strong production and disciplined spending, free cash flow surged past $4 billion. Newmont allocated $2 billion to share repurchases and maintained a dividend yielding 1% annually. Looking ahead into 2026, Newmont's position remains compelling, especially with gold staying above $4,200 per ounce. If industrial demand from the artificial intelligence sector grows further, Newmont may benefit substantially. Analysts expect between $2.5 billion and $3 billion in free cash flow under current price conditions. Low-cost expansions at Nevada gold mines and ongoing work at Yanacocha sulfides should increase production without dramatically increasing expenses. With a net debt below $3 billion, Newmont retains flexibility to pursue acquisitions, especially as the gold mining industry continues to consolidate. This combination of strong margins, stable production, rising artificial intelligence-driven demand, and impressive financial discipline creates the possibility that Newmont could outpace Palantir once again by offering investors exposure to the tangible resources driving technological change. Now turning to the entertainment and media world, Warner Bros. Discovery underwent a dramatic shift in 2025. The company, which had struggled after a complex merger, found its footing by embracing a sharper approach to streaming, restructuring operations, and cutting costs with precision. HBO Max's subscriber base expanded to 128 million users, a remarkable figure that boosted margins and helped offset declines in traditional cable television. The company saw theatrical success as well, with a lineup of box office hits that boosted adjusted revenue by 23%. Warner Bros. Discovery also made significant progress in reducing its debt, lowering its obligations from $38 billion to $33.3 billion. Executives announced a future plan to divide the company, separating the studio and HBO assets from the cable networks. This restructuring opened the door to the possibility of unlocking hidden value within each business segment. Meanwhile, takeover speculation swirled as Paramount, Skydance, Comcast, and Netflix all appeared as potential bidders, raising expectations of a strategic contest for control of valuable entertainment properties. Looking at 2026, Warner Bros. Discovery appears ready for a powerful year. Leadership emphasized that HBO Max is entering what may become its strongest expansion period yet, driven by an aggressive European rollout and a packed content slate. One of the most highly anticipated titles is a Gremlins reboot planned for 2027, but the company also maintains a deep catalog of television programming that spans genres, regions, and audiences. Analysts estimate the company's fair value near $22.47, though genuine acquisition offers could push valuations much higher, especially if asset divisions or carve-outs reduce the company's remaining debt. However, Warner Bros. Discovery must also contend with potential regulatory complications surrounding mergers or takeovers, persistent cord-cutting in the cable market, and revenue that may stabilize near $41 billion to $42 billion if streaming competition intensifies. Still, by focusing on sustainable free cash flow, fewer but higher quality releases, and stronger operational discipline, Warner Bros. Discovery could easily outperform Palantir in 2026 by delivering profitable entertainment that reaches worldwide audiences. Across these developments, one idea links Western Digital, Newmont, and Warner Bros. Discovery together. Each company in its own domain harnessed a megatrend that artificial intelligence helped shape. Western Digital built the physical backbone that artificial intelligence models rely upon. Newmont provided a raw material that artificial intelligence hardware quietly depends on. Warner Bros. Discovery capitalized on artificial intelligence's indirect effects, from recommendation algorithms improving streaming engagement to broader digital ecosystems driving demand for high-quality content. Palantir, powerful as it is within the analytics space, faces competition not because its value has declined, but because artificial intelligence is spreading across industries in ways that allow many different types of companies to thrive. As investors look toward 2026, it becomes clear that artificial intelligence is no longer a narrow technological niche, but an expansive force touching storage, commodities, entertainment, manufacturing, logistics, pharmaceuticals, and nearly every corner of the digital economy. That means Palantir will continue playing a major role role, but it also means many other firms will capitalize on the same underlying movement in their own unique ways. The companies that best align their strengths with the widening artificial intelligence ecosystem may ultimately determine who leads the market in the years ahead. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.